I have this recording regardless, so it'll be all right. I have it recording in OBS, so I can upload it to YouTube or something, and you can download it.
Okay, yeah, perfect. Yeah, or yeah, send it over, clip it, whatever.
Yep.
We can do it that way. All right, perfect. Let me go ahead and hit that. Okay. Oh, there we go. All right, mic check. I just want to make sure, guys, so we're not upset later on when we don't have our recording. So, all right, cool. So again, I'm gonna let TTI take it away. He's got South American stuff to do on a different time zone. So,
Yeah.
um, um, but yeah, and basically he's just gonna kind of push us into it. I'm gonna go ahead and finish the first chapter. Yeah, man, go ahead and take it away.
All right. So first off, thanks for inviting me. My name is Hamilton. I'm here with the Trading Initiative. Garrett and I have, or Potter, I should say, Potter and I have a good working relationship. Obviously, he takes care of the short-term traders that we come across, scalping and day trading, and I take care of more of the longer-term stuff. And we collab a lot, so there's a lot of cross-pollination, if you will, between members. There's a lot of TTI members that have switched over to day trading that are in simple stacks, and then the other way around as well. So I do appreciate the opportunity, and some of this stuff for some of you guys, you listen to me scream about every single day. For those of you that are new to hearing me speak, I'm blunt, I'm aggressive, I'm honest. If you have anything, any questions or any problems, feel free to type them out. I don't have any issue taking them head on. Without further ado, though, Potter asked me to talk briefly about the 4 different types of trading. And realistically, the reason why is because most of us, when we start trading, are only really aware of day trading. That's what we think of. Fast, aggressive, sitting on the beach, you're in and out of a trade within the first 15 minutes, and then you can go do whatever you want. And if you've been trading for realistically more than about a week, you know that that's just not real. It's a mirage that is sold to you for marketers. And a lot of the times I see Potter answering questions inside of simple stacks. You know, you need to have realistic expectations. And if day trading is not for you, let's say you have work or something, it should be viewed that maybe you should be thinking about longer term stuff. So we're trying to nip that in the butt right off the bat in chapter 1. Let's define what type of trader you are. I'm assuming about 99% of you are going to fall into the scalping and day trading categories. You're in simple stacks for a reason. You run Potterbox for a reason. So this is going to resonate with you. For those of you that might be on the edge and you, at the very minimum, want a description of what it's like to be a longer term trader, you're going to get that in these slides. All right. So without further ado, I'm going to start. What style of trader are you? Once again, if you have any questions, type them in class chat. I do have it up. I can see it. So I will be able to respond to those. I think I'm going to have to click to turn these slides over every time. So it might go black in between slides. I apologize for that. I have some cool animations. I'm in my mid-30s and presentations are stupid. PowerPoint sucks. And it's built like I graduated in the mid-2000s, all right? Okay, so at the end of this, the objectives are you're going to be able to define the 4 major trading styles. That's the most important part of this. We're going to be able to define what the most important variable is in trading. It's probably not what you expect, but we're going to kind of talk through that. And you're also going to know the pros and cons of each of the 4 different styles of trading and which one you believe is better suited for yourself. Those are the 3 major objectives of this presentation. So part 1 here, 4 major trading styles. There are 4 major trading styles. There's scalping, day trading, swing trading, and position trading. Most of you have probably not heard of position trading. That's kind of the odd man out. The only difference realistically between all 4 of these is the time frame you're utilizing to map out the trade and the length or time of the open position. You have to understand really quick, if you're a technical trader, everything we do is fractal in nature. What does that mean? It's repeatable across all different time frames. It doesn't matter if you're trading the 1-minute chart, the daily chart, the weekly chart. These chart patterns and these concepts that Potter and I continually drill into you guys work across all different time frames. But depending on which time frame you're utilizing, different strategies should be used. Hopefully that makes sense. So between those 4 major types, the only 2 differences are the time frame that you're utilizing to actually map out the trade, and then the length of how long you're actually going to hold the trade for. So let's start with scalping. I want to nip this in the butt right from the beginning. There is an allure, there's an illusion, if you will, of having complete control over the trade tends to work out better in the long run. because you don't have to worry about all the nasty stuff that happens if you're not in control. I just want to ask you a very simple question. How many of you are in, and be honest, positions of privilege in your workplace where you get to make decisions that directly impact the company fiscally? There's not many of you, and that's okay. There's not many people in a company that have the ability to make decisions that will impact the company's bottom line in a significant way. That's all right. It's the same thing with trading. Having the opportunity to make a million decisions a day generally does not equal more money. Most people are notoriously bad at making these types of decisions. So regardless if you're a scalper, day trader, swing trader, or position trader, always keep in mind that having the power to make the decision over and over and over and over and over is not necessarily a good thing. And I think we can all agree that over trading tends to be a problem no matter which style you're trading. And that comes down to the illusion of having all this control. So the reason why I bring it up for scalping is scalpers are notorious for trading sometimes hundreds of times a day. You will see in a second, I have some charts from a friend of mine. I was trying to find some Manny charts because I know he likes to scalp gold, but I couldn't find anything that was applicable to what we're talking about here. So I'm going to show you some of my friends, and they'll scalp 100 times a day on the same chart. It's nuts. Having the allure of having that much free decision-making process is not always the best. So let's talk through the characteristics here of scalping in particular. The time frame, as we go through these four, I want you to understand this is generalization. Some of this is going to be different. I'm just trying to build out the differences, the key differences between the four styles. So the time frame that generally scalpers are trading is going to be the tick chart for the crazy people, up to about 5 minutes. That makes sense for most of you that understand what scalping is, right? The required length of trade is very small. So anything more than really the 5 minute, you're starting to get into the day trading territory, right? Volatility intraday is required for a scalper. You need to be trading something that's moving intraday. It's required for a scalper. If there's no intraday volatility, there's no reason to be trading the chart. Your risk to reward as a scalper is going to be very small. It's not big. Most scalpers do not look for anything more than 0.25 to 0.5 for every dollar that they're looking to risk. That means 25 cents. They will risk a dollar and they're looking to make 25 cents to 50 cents. For some of you guys, you're like, whoa, that doesn't make any sense. They make up for it with a very high winning percentage. They require a very, very high winning percentage to make money over the long term if they are looking for these types of risk to rewards. And it makes sense. If you're holding a trade for 10 seconds, 15 seconds, you're not holding that for an 8-to-1 setup. You're in and out very quickly. You're capturing very small price inefficiencies. That adds up over time. But once again, your average win rate has to be very high. So average hold time, seconds to minutes. And the description here, scalpers quickly dart in and out of positions, taking advantage of small price efficiencies. And I mean the smallest price efficiencies with a smaller risk to reward, but a higher winning percentage. All right. So there's the trade-off, smaller risk to reward, but higher winning percentage. You can look at here, I said I was going to show you, these are two of my friends' charts. This is like cracked out trading 101. Now he trades shares, he's not trading options. Every single arrow is an order that is executed fully. Look at these charts. This is a professional scalper, and this is what it looks like to trade like this. It's mind-blowing. I cannot do this. He has hundreds of executions per chart. It's insane. Sometimes there's not this many. I kind of cherry-picked a little bit, so just to prove a point. This is scalping. This is day traders don't do this. So this is the type of stuff that is required for a scalper. Lots of positions, generally the same chart, in and out very quickly, taking advantage of very, very small price movements, and you make up for it with a larger winning percentage. Let's move on to day trading, which is probably where most of you guys, are living here, day trading, right? That's what a lot of what Potter does, and it works. But there's differences in characteristics here. Time frame, generally 5 minutes to 1 hour is what you're looking at when you're trading. Sometimes you can go down to 1 minute. But once again, generalizations here. You might map the trade out on the daily, but you're not trading the daily chart intraday. It doesn't make any sense, right? So in between about 5 minutes to an hour is the sweet spot for a day trader. Once again, you need intraday volatility. The price has to be moving intraday in order to make money.
Hamilton?
Hello? Hello? Looks okay on my end, but maybe it did. We'll see. Audio is out. All right, 1 second.
It's crashed on me, so I don't know.
No, I closed it. Is it back? Can you hear me?
Yeah. Did your shit crash?
No, it just, you guys, I heard you talking and apparently it was out. So we'll just get right back into it. That's okay.
Yeah. Go ahead, man. I didn't. I just want to make sure everything was okay. All right, cool.
No, I appreciate it. Okay, so day trading. Once again, differences between day trading and scalping. Risk to reward is going to be greater than a scalper, right? Once again, generalizations, but you're looking for like a 1-to-1 or a 2-to-1 move, generally speaking. That brings down the break-even win rate, meaning you can lose more as a day trader than you can as a scalper and still make money in the long run. It's important to understand these differences. Scalpers require a very high winning percentage because they are targeting smaller amounts of reward per the risk that they're putting in. Day traders, they're targeting slightly higher risk to reward, therefore they need to win less in order to make money over time. So there's a huge advantage in my mind for day traders because you can actually afford to screw up more often than a scalper and still make money as long as you're targeting the right type of R to R. The average hold time moves from a few seconds to a few minutes for a scalper to minutes to hours as a day trader. But the caveat here, obviously, as a day trader, within the same trading day, you have to close. You do not hold overnight. And that's really the premise of a day trader is the big bad boogeyman is the overnight risk, which I'm okay with, but I totally understand from a day trading perspective, not wanting to hold things overnight, because especially if you're trading options, weeklies, or something that is expiring relatively soon, that overnight move against your position might take out everything you just worked for intraday. So I totally understand. As a day trader, you have to get out end of day. Little side note that I didn't put here, very rarely does a good day trade turn into a swing trade. It's usually the shitty day trades that turn into swing trades that you do not stop yourself out of. And then it just so happens that more often than not, you get the gap against you. So if there's anything you can take away from that, is if a trade's going against you and you're thinking to yourself, I kind of just want to hold this overnight to see if it works, just do yourself a favor and cut it. Now, if it's already big up and you're hedging, like Garrett does a lot, totally okay. But if it's a losing day trade and you're holding it for the hope that the gap will help you and save you, you're going to end up with a lot of pain over time. So don't do that, okay? Description, day traders have a longer hold time than scalpers, but still close their positions before end of day to avoid overnight risk. They have smaller but more frequent wins, right? It's the same thing as scalping, a little bit smaller wins, a little bit more frequent wins, but once again, they're able to lose a little bit more and still make money in the long run because of that higher risk to reward setup. Let's go ahead and look at Potter's. This was Potter's chart. I mean, Potter obviously is charting day trades all the time. This is his bread and butter is day trading. Obviously, he dabbles in swing trading as well, but day trading is his niche. He kills it. And so most of the stuff that you're seeing on an intraday basis when he's posting it, these are day trading style of charts. You're down on within the minutes on the time frame, 5 minute, 30 minute, whatever, up to an hour, sometimes 4 hours. But generally speaking, you're living in that intraday time frame. Everything you're doing, all the levels, all the boxes he's drawing. You might set the trade up on a daily, but intraday, you are not trading the daily. You are trading the smaller time frames, right? So you guys all know that. Potter obviously shows it. It's great stuff. Swing trading, this is where I tend to exist. Key differences here, 4 hour to weekly time frame. For some of you guys, it's like you've never even looked at a weekly chart in your life, and that's totally okay. Totally understandable. But for me, we exist somewhere within the 4 hour daily or weekly charts. Volatility intraday is not required. And that's one of the biggest differences between short-term trading and long-term trading. As we get into position trading, you'll see that this is also the case. Intraday volatility is required for a scalper and day trader. You need the price to be moving in order to take advantage of price inefficiencies. Swing trading and position trading, where we are actively holding overnight, we are playing that overnight risk. And we expect that overnight price movement to work in our favor over time. Therefore, intraday volatility does not matter to us whatsoever. At all, actually. Sometimes it's best to not even look at it. And that's a key difference between the two different styles, short-term and long-term. Our risk to reward is slightly higher, right? So we're looking at 3 to 4, but we lose more often. Our break-even win rate is 25% plus. So as you can see, every time we are going a little bit further out, the trading itself becomes a little bit less efficient in terms of winning percentage, but the risk to reward gets popped up. So it makes up for that diminishing winning percentage. The math needs to make sense. Average hold time is days to weeks. We hold overnight. I didn't post the chart, but as a swing trader or position trader, taking a trade intraday and closing it the same day absolutely is like the worst thing you could possibly do, because the things that we're trying to capture are outside of regular trading hours. That's where we play ball, is when day traders and scalpers are not playing ball. We are playing the European night, but not actively trading it. We expect the markets to slowly float up into the next open and then obviously over time. So description, swing traders have a longer hold time, than scalping and day trading with profit targets days to weeks away. We have larger wins on average, but they're less frequent wins. So once again, it's a key difference. We lose more often, but the wins make up for the losses. This is a trade that we're currently in. I just grabbed one, MPC. I posted it earlier today inside of the Simple Stacks. Realistically, the only reason why I want to show you this is we opened this trade 40 days ago. 40 days, we've been sitting in the same trade, and for more than half of it, this fucking trade did nothing. Excuse me for swearing. I know this is recorded, but this tests your patience. The stock did nothing for 20 days straight, and the options premium got zapped. We had to hold it because it fit our system, and obviously we got the pop that we expected to have up into all-time highs, and the contracts are back, thank God. But completely different set of skills. From a day trading perspective, you would have been out, rightfully so, at the first price target 15, 20 days ago. As a swing trader, we have to hold through this type of stuff, and it can be very mentally taxing in its own right, having to hold through stuff like that. Position trading, the last one we're going to go through. This is realistically the least popular, at least in terms of FinTwit. These are kind of, I'm going to air quote here, the boomer traders. These are guys that are holding for quarters, right? This is a completely different style of trading. This is not long-term investing, though. There's a key difference. So time frame here, daily and monthly. They are looking for trends that will play out over quarters. Volatility intraday, like swing traders, does not matter. You are looking to play market cycles, not intraday volatility. Risk to reward, it could be anywhere. I've seen some of the greats take 10 to 1 trades only. Their winning percentage is very low, but the wins obviously pay for the losers. So I just put 4+. It's bigger than swing traders. They're going to lose more often than win, but the wins are absolutely going to blow the losers out. And if you have an edge, hopefully, obviously make money in the long run. So the break-even win rate, I left at 25, but it could be realistically a lot lower. There's a trader in Unknown Market Wizards that's targeting 18 to 1 setups. He had like a 6-month run where he had 18 to 1 setups, and he had he lost a majority and he won 2 in a row, and it like built his entire year out. I mean, when they hit huge, but you have to be able to stomach the losses to get to those big wins. Average hold time, weeks to quarters. It's insane to think about as a scalper or day trader to have a trade on the books expecting this thing could take 6 to 12 months to play out. It's a completely different breed, right? The guys that do this stuff and girls. Position traders have the longest hold time of the 4 major trading styles, typically looking to capture quarterly price action around market cycles. It's, like I said, completely different. But the cool thing is all 4 of these are trying to do the same thing. Extract cash out of the market. It's 4 distinctly different ways to do it, though. And it's a very important, piece of the puzzle here is you get to decide which one, how you want to actually play this out. Threw up a trade we have on the books as well. We're swing traders, but this specific trade is more akin to a position trade. Posted this in Potter's group as well a while ago. This is UBS. It's a Swiss bank. This is a 15-year base. You can see the cute little horizontal level line that I drew there. 15 years. It was stuck underneath $23. And we played the breakout. We have guys in the group that bought Marches. We got, we're going like way out there, right? So this would not be a day trading vehicle. This would not be a scalping vehicle. This is something you buy and you forget, realistically. I have no idea, where this trade is going to go. You can see kind of our price targets, but the key here is 15-year base. And because we're buying that time frame, you have to extend your profit targets based off of time as well. If it took 15 years to break out, is it realistic to expect the price target to get hit within a week? Probably not. So we bought lots of time on this. Not something we normally do, but we don't want to skip a nice looking chart. So I want to talk really quick about the most important variable in trading. And I want you guys to ask yourself really quick, and I'm going to take a sip of coffee before I start coughing. What do you think the most important variable in trading? What is it? Is it patience, brevity, creativity? There's lots of good answers, but think about it. What do you think is the most important variable? Mindset, yourself. Sure. Risk management. By the way, there's really no wrong answer. I think you could argue any of these, but because I made the slides, my answer is right, okay? All these are good answers. All of them could be argued to be right. I chose to go a different route. But once again, not saying you guys are wrong. I'm choosing time. And the reason why I'm choosing time within the context of this video is because most of the people in this group are day trading and scalping, and therefore you have to be at your desk at a specific time to trade. How many of you are working full time and trading while at work? Don't say it, actually. Don't tell me. You know who you are. This is stressful in of itself. It's more stressful trading at work than it is, trading at your house or anywhere else, because not only are you dodging management or your priorities, you're also trying to play the market. So you got a million things going on in one side of your brain, work, everything else. Other side, the most important variable to me is time and how much you have of it. How much time do you have to dedicate to trading? If it's a lot, day trading and scalping makes a lot of sense. If it's not a lot, maybe swing trading or position trading makes more sense. But let me throw something out there for you guys really quick. If you find yourself, specifically if you live on the East Coast and you're day trading, West Coast can get away with this because we can wake up a little earlier. I say we like I still live on the West Coast. I live EST +1 in Brazil right now. It's about to shift to +2 and my time sucks. Market doesn't even open until 11 a.m. and I think I work till like 7 p.m. It's the worst schedule ever. If you're on the East Coast, I want to, at the very minimum, throw a bone at pre-market trading is viable. Lots of brokerages will allow you to trade pre-market. It's not as liquid. It's a little bit more volatile. But if you are keen on day trading or scalping, you can make it work before work starts. Not saying you have to. If you can day trade while work is going on, totally okay. But just think about it. You can trade pre-market, and you don't have to worry about all of the stuff in the back of your mind, the boss screaming at you, you're hiding everything else, right? Either way, most important variable is to figure out how much time you have to dedicate to this and then run with it. You're better at work? That's awesome. You are definitely an outlier. I was a day trader. I started off as a day trader. I day traded for years. And I only switched over to swing trading because I got a job at Merrill and I was unable to day trade. I couldn't do it. They would have fucking clapped me and I needed that job. So nights and weekends mostly. Yeah, dude, that's great. Not telling you not to do that stuff. I'm just telling you to frame out when you think you're going to be the most efficient, because it's incredibly important. You have to be the right state of mind, specifically as a day trader or a scalper, because it's high intensity stuff, which we're going to go over in a second. Okay, layers within layers. Once you understand where you want to be in the grand scheme of things, a scalper, a day trader, swing trader, position trader, that's when the good stuff happens. That's why you're here. You're learning the Potterbox, right? So once you've established your time variable, what's the time frame that you want to be trading? You have to pick a style. You could be a mean reversion, right? You're shorting off of highs. You're longing off of lows. You could be a breakout or breakdown trader. You're buying breakouts. You're shorting breakdowns. You could be trend following, which is a lot harder nowadays, but if you have a long enough time horizon, trend following is great. Event driven. You could specifically just trade event driven moves, upside, downside, fill gaps, that type of stuff. You could be fake. You could start a FinTwit account and open up your own Discord and just post fake paper trades. Do whatever the hell you want. You're in here, so you're learning the Potterbox method. Potterbox is a beautiful combination of mean reversion and breakout breakdown. All right? So what you're learning from Potter is a mean reversion style and a breakout breakdown style, and it works. It's great. He's the only guy I've ever endorsed. Seriously, the only guy I've ever endorsed and I actually trust in this space that teaches well. So the stuff that you're learning here, you would be fitting into the scalper / day trader schism, and then the mean reversion / breakout breakdown schism, right? So you know exactly where you're at now inside this big universe. It's important to be able to identify yourself within this because, as we all know, I could be bullish on something over the next 4 weeks, and you could be, bearish something today, and we could have completely different opinions, and you could call me an idiot, and I can call you an idiot, and we can both make money at the exact same time. It's great. There's a trader in here that's not actually in here right now. I believe her name is Ange. And she was like, I'm shorting Walmart. And I'm like, you're crazy. This is an all-time high retailer name. This is like the only stuff working right now. And we have a guy that took the Walmart trade and he's up a little bit and she shorted Walmart and she made money. And so it's important to understand and identify where you're at within this huge spectrum of different types of traders, right? Okay. Almost done here. Major differences. I want to talk through the major differences between short-term and long-term trading. So we're going to break up scalping and day trading as short-term, swing trading and position trading as long-term. Most of this stuff that I'm about to go through is from a book that I recommend everybody read. It's called Trading from Your Gut by Curtis Faith. It's a short read. He writes like a fucking kindergartner needs to read it. It's great. You can read this thing in like a day. But the stuff here is incredible. So I'm going to talk through some of the stuff here. He's a swing trader. So in his book, it's a slight bias towards swing trading. Listen, we're talking Potterbox, so there's going to be a slight bias in day trading and scalping here, all right? So while all traders share the same goal, which is extracting capital from the markets, how they go about it cannot be more different. All right, let's talk through this stuff. Different sports, same idea. What was I just talking about with the Ange example? She was shorting Walmart. We were longing Walmart. We both made money. I think she probably made more money. Don't tell her that. But doesn't matter. Let's take this into account. Tom Brady, arguably the best quarterback of all time. Did you guys know that he was actually drafted within the MLB? Did you know that? There it is. It's a fake picture, but he really did get drafted. Can you imagine in this, in this hypothetical situation, Tom Brady, peak of performance in New England, going over to the Boston Red Sox and throwing as a starting pitcher a World Series game? Do you think that there would be the same level of performance? They're both, he's throwing a ball. He's the best in the world ever at throwing a football. Do you think he'd be able to throw a baseball at the same level, even remotely? Absolutely not. Completely different sports. It's the same goal, win the championship. It's the same instrument, throw the goddamn ball. There's zero chance he's going to be as successful doing both. Same thing with trading. Why do I say that? If you're a short-term trader, stick to fucking short-term trading. If you're a long-term trader, stick to fucking long-term trading. This is one of the biggest gripes I have as an educator. I hate when someone comes to me and they say, I'm going to swing trade my $1,000 account to 25 grand and then I'm going to day trade so I can get around the PDT rule. I go, first off, if you can turn a $1,000 account to 25 grand, you got a gift and you're an idiot if you do anything other than what you were just able to do. Turn that bitch to 500,000 if you're actually good at what you're doing. Don't change anything. You just 25x an account, don't change anything. But secondly, the skills that you learn as a swing trader, a position trader, or any sort of long-term trader are going to be counterintuitive to the things that you learn as a short-term trader, day trading and scalping. That the technicals are the same. They're fractal in nature, right? Everything you're learning within chart patterns, trends, support and resistance, this is the same thing. But you could not express these differently. Just like Tom Brady wouldn't be able to start a World Series game for Boston Red Sox, a day trader generally is not going to be able to go over and be a great swing trader if he's really good at day trading, and vice versa. So stick to your lane, at least at first. Obviously, there are examples of people that can do both. Don't get me wrong, but you would be best off just sticking to one thing and mastering it. And then once it's abundantly clear that you know what you're doing, you can start to explore other things. So if you're trading the Potterbox, don't fucking do anything other than the Potterbox. I've been doing this for 14 years. The Potterbox is hard enough. You don't need ICT and all the other bullshit in your face. Stick to the Potterbox. Get good at it. Because it's not going to, the stuff that you learn is not always going to help. All right, having this broad base of knowledge is not going to help your trading. It's not. You can know everything in the world and still be an idiot. There's a lot of FinTwit accounts like that. They all have over 100,000 followers too. Short-term traders. Scalpers and day traders have a completely different skill set than long-term traders. All right? Fast-paced. You guys are day traders and scalpers. It's fast-paced. It's in your face. It's aggressive. Critical decision-making skills are necessary. That's one of the keys. Critical decision-making skills. You have seconds sometimes to make a decision. You have to know what you're looking to do. You have to build that process into your system. You absolutely have to. Mechanical and reactionary. What does Garrett always say? Price and charts are mechanical. As a day trader and a scalper, this stuff is reactionary and mechanical. You have levels, you have hotkeys, you click the fucking hotkeys just like a video game over and over and over and over. That's it, right? You don't have to do this with the longer time frames. But the shorter time frames, you have to be able to execute things incredibly quick and make decisions like that. More screen time during market hours, whether you like it or not. If you're a day trader or scalper, you have to trade when the market's open. So some people are going to have a problem with that. Some of the guys that have come over to TTI from Simple Stack say, I don't have enough fucking time to day trade. I don't want to leave the market though. What can I do? And I go, well, we can help you trade outside of regular trading hours. But if you like to trade it during regular trading hours or you have the time, stick to day trading. So once again, this is that time component. That's the most important variable. More screen time during market hours if you're a scalper or a day trader. That's where you play ball. Greater stress, higher cortisol, and adrenaline levels. That's not me telling you. That's academically an academically written and peer-reviewed paper that day traders have higher levels of stress than long-term investors and longer-term traders. Why? Because of the critical decision-making skills necessary to complete what you're trying to do. The fast-paced nature, the aggressive nature. You have to be okay with managing your emotions, the greater stress, the higher cortisol. This is real. And I don't say this to bash day trading or scalping. especially for those of you that are like adrenaline junkies. You like jumping out of fucking airplanes and playing with dangerous animals and stupid shit. I don't know why you do it. If you like that stuff, this is great. But for most people, it can be, inhibit our ability to perform. So understand now you have to have some sort of mechanism built in within you to take advantage of this stuff, or at the very minimum, let's pull some old yogi stuff, like find your zen, find your peace. Because in the thick of things, when your back's against the wall and a gun's to your head and you're down on your position and you're thinking, do I close? Do I layer? What do I do? You have to be able to execute, right? High performance job, A game is constantly required. It's kind of the same in all of trading, but in day trading and scalping, it's even more because, hey, listen, you're fighting a rigged game, which is the next point. Your ability to function within a rigged game. Now, the entire market is manipulated, right? We can agree. You don't like that? Don't fucking trade. Don't trade. Buy the S&P 500 and go get an extra fucking job somewhere. You have to understand that the market is manipulated. You also have to understand that the market is manipulated more on a shorter time frame. It's easier to move a micro and small cap over 3 to 5 minutes than it is a mega cap. As a matter of fact, it's fucking like almost impossible to move a mega cap and manipulate it over the course of 6 months. But on an intraday basis, you can flush cash very easily and move charts. You have to understand that that is happening everywhere. High frequency trading firms, algorithms, etc. You have to come to terms with that and use the Potterbox to play into the advantages that sets you up for, right? Last thing here, it's left brain dominant. Left brain dominant meaning logical, quick reactions, fast pace, critical thinking, etc. It's very left side of the brain, right? So everything that you plan for during the morning when Potter's putting all of his stuff out, you know exactly what you need to do. Your only job is to execute it as flawlessly as possible. And when you start doing your own Potter boxes, planning your own trades, all this stuff has to be taken into consideration. It's also more fun. I'm not going to lie. Day trading, scalping is just fun. Don't let that be a reason why you do it. But swing trading is fucking boring. Swing traders and position traders have a completely different skill set than short-term traders. It's slow-paced. It's good for us boomers. Analytical decision-making skills are necessary. So unlike day trading and scalping, where critical decision-making skills, backs against the wall, longer-term investing and trading requires analytical decision-making skills. We have to sit behind charts at 9 p.m. 5 days a week when the kids are asleep and the wife is going to let us do this stuff, and we have to pour through ideas, and it sucks, and we're thinking about intermarket relationships and what the fuck's the dollar doing and where's gold and is China going to come? It's like you have to build this puzzle, which I put at the bottom there. Day traders, it's like a one-track mind, baby. You got the levels, you take the trades, pop, 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 video game stuff. Long-term traders, we have a million different pieces we have to put together. So it's more analytical. It's not easier, not harder. It's just different. So patience is required. A lot of it. Seriously, patience. I showed you the MPC chart, the UBS chart. If you're not patient, you're going to blow being a long-term trader. You have to. It's a very hard skill to teach. The only way I've been able to teach this stuff is by letting people mess up and then say, so do you feel good about the decision? And they go, no. And I go, so you're going to do it again? No. I could tell them a million times, sit on your hands, don't take the trade. They're going to do it. It's human nature. But once they lose a few times, they're like, all right, I'm going to listen. Patience, 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 patience. You have to. More screen time outside of regular trading hours. So scalping and day trading, more screen time inside. Swing trading, position trading, more screen time outside. There's the key time difference we were talking about. So depending on where you are, that is a very important thing that you have to decide. Your ability to organize and build thesis using different data sets. I was kind of joking around about that, but seriously, you'll see some of the stuff I post in Simple Stacks where I'm like, look at this intermarket relationship. I was just talking about consumer discretionary against consumer staples. The ratio's not breaking down. It doesn't look like bears are going to give up, or it doesn't look like bulls are going to give up. From a day trading perspective, that's just Chinese. Who cares? You don't care. As a longer term trader, you have to understand that this type of stuff exists and you have to be able to use it inside of your analysis. Your ability to function outside of other traders' biases, which is another big thing. If you're holding a position for 6 weeks, the worst thing you can do is pick up FinTwit, baby, because there's going to be a million people telling you you're a goddamn idiot and you're going to make a bad decision. You have to be able to shut out the biases. If you're day trading, it's generally you in the chart and you're locked in. You don't hear the voices until after the trade. If you're swing trading, you hear everything, and it can be very, very distracting, right? So you have to be able to shut that stuff out. I put in the bottom, puzzle building, wrap this up, right brain dominant. Right brain dominant, more creativity. You have more time. It's more abstract. You're putting together the puzzle. So left side, day trading and scalping. Right side, scalping and swing trading and position trading. You know, in a perfect world, we'd be able to marry both of those, but it's incredibly difficult, right? So in summary, 4 styles of trading: scalping, day trading, swing trading, and position trading. In my mind, the most important variable in trading is time, the amount you have of it to actually trade, and your ability to execute your strategy effectively. And then the main differences between short and long-term trading. Short-term traders require critical decision-making skills, lightning fast reactions, and more time throughout the day to trade. Long-term traders require analytical decision-making skills, incredible patience, and more time outside of regular trading hours to trade. Main differences wrapped up. Any questions before I hop off? Because I am in Brazil and my wife is going to kill me in a second. Stop the stream here. Feel free. If you guys have microphones, you can ask on the mic or you can type. I have this recorded. whole point of this video is to set the stuff up for Potter coming in, right? So we're trying to set the stage here. What is day trading? What is scalping? What are the differences between swing trading and some of the other styles? Like I said, most of you guys understand your scalpers and day traders, but some of that stuff might have turned a light bulb on. So hopefully it helps. FinTwit is toxic as shit, Waylon. You're absolutely right. George, if we have things to talk about, we can totally do it. Sometimes it just gets hard to like pull topics out.
Shit is not good for my mental health, I'll tell you that.
FinTwit? Yeah, it sucks, man. My mute list is like 800 people long.
Oh, I block every day.
I block the bots, but I mute non-bots because I hope at one point I'm going to get paid by Elon. It probably won't happen, but...
Yeah.
Okay.